Jargon. What does it all actually mean? Imagine a new digital universe, a parallel world existing online, built on top of the internet as we know it, but fundamentally different in its architecture, where money, ownership and communities work differently, powered by groundbreaking innovations. This is the cryptoverse, a broad term encompassing all things crypto, a space powered by new tech, cutting-edge cryptography, and distributed systems. Full of potential and a bit of chaos, it's a rapidly evolving landscape. The old internet was great for sharing information freely and instantly, but value, like money or unique digital items, always needed a middleman, a trusted third party. Banks acting as central authorities, auction houses verifying authenticity, governments overseeing regulations. The cryptoverse aims to cut out those middlemen, to disintermediate traditional systems, letting you send value directly to anyone, anywhere in the world, prove digital ownership of your assets with cryptographic certainty, and access open financial systems that are permissionless and borderless. The big idea that underpins all of this? Decentralization. Control is spread among users in a network, not concentrated in one company or government. This shift means more transparency in how systems operate, new ways for creators to earn directly from their fans, and true digital ownership of your online identity and creations. We're still early in this technological revolution, but the impact on society and the global economy could be huge. So, why care about all of this now? Because these technologies are quietly and steadily becoming part of everyday life, whether you realize it or not. Learning the basics today, understanding the fundamental principles, is like learning to use Google in 1998, before it became a household name. It'll help you navigate the future with confidence and clarity. This isn't just for techies or traders glued to their screens, it's for anyone who uses the internet and participates in the digital economy. The cryptoverse is ultimately about putting power and control back in your hands, where it belongs. Understanding it now prepares you for what's next, giving you a head start in this new era. So, let's dive in and explore this fascinating world together. If the cryptoverse is a new world, blockchain is its foundation. Think of blockchain as a digital notebook, shared across thousands of computers. Every transaction, like sending digital money, gets recorded as a new entry or block. Once a block is full, it's sealed and linked to the previous one, forming a secure chain. Changing an old entry would break the chain, making tampering obvious and nearly impossible. This notebook isn't stored in one place. It's copied across thousands of computers or nodes. To hack it, you'd have to change most copies at once, practically impossible. That's why blockchains are secure and don't need a central authority. It's a transparent, tamper-proof ledger anyone can view. This simple idea powers digital money, automated contracts, and digital ownership. Blockchain is the trust engine of the cryptoverse. It's what makes everything else possible. Now let's see what's been built on top of it. So, what's the first groundbreaking application that truly harnessed the power of blockchain technology? It's cryptocurrency, a revolutionary form of digital money designed specifically for the internet age. Think of it as a new way to transact, store value, and participate in the global economy. Bitcoin started it all back in 2009, marking the genesis of this digital revolution. It introduced a groundbreaking concept, letting people send money worldwide, directly to each other, bypassing traditional intermediaries like banks. The key innovation? It's decentralized, meaning no single company, bank, or government has control over the network. This distributed nature is what makes it so resilient and transparent. Since Bitcoin's launch, the cryptocurrency landscape has exploded. Thousands of cryptocurrencies have launched, each vying for a piece of the digital pie. And each one is designed with a unique purpose, from facilitating fast payments to powering decentralized applications. Ethereum is the next big player in this space, and it's taking things to a whole new level. Unlike Bitcoin, Ethereum isn't just about digital money, it's programmable. This programmability allows developers to build all sorts of decentralized apps directly on its blockchain, opening up a world of possibilities. Ether is its native currency, used to power these applications and incentivize participation in the network. But the real power of Ethereum lies in its ability to run complex code and create entirely new digital services that were never before possible. People are drawn to crypto for a variety of reasons, including the promise of greater financial freedom, investment opportunities, and the chance to access innovative new digital apps and services. In countries with unstable economies, cryptocurrency can provide a crucial lifeline, offering an alternative to traditional financial systems. Others see it as a way to grow wealth over the long term, or simply to interact with cutting-edge technology and be part of the future. Stablecoins, like USDC or Tether, play a vital role in the crypto ecosystem. These digital currencies are pegged to real-world assets, such as the US dollar, which helps to make them significantly less volatile compared to other cryptocurrencies. They're primarily used to move money around the cryptoverse quickly and efficiently, without having to worry about wild price swings disrupting your transactions. Crypto is far more than just digital money. It's the very fuel that's powering a new decentralized digital economy. It's fundamentally changing how we think about value online and how we exchange it. Next, let's dive deeper and see how the world of finance itself is being completely rebuilt from the ground up using these technologies. Welcome to the exciting world of DeFi, or decentralized finance. Enter DeFi, decentralized finance. It's finance, rebuilt for the blockchain era. DeFi replaces banks with code, making lending, borrowing, and earning interest open to anyone, anywhere. No more gatekeepers or minimum deposits, just a crypto wallet and internet access. Example, instead of a bank, you use a DeFi app to earn interest by lending your crypto directly. No bank taking a cut, and rates are often higher. Billions worldwide are unbanked. DeFi opens doors for them. Everything is transparent. See how protocols work, track money, and check interest rates in real time. No hidden fees or closed systems. DeFi isn't just for the unbanked, it's for anyone who wants more control and transparency. The tech is new and can be risky, but the core idea is powerful, open, global, transparent finance. It's a financial system for everyone. The future of money is being written in code. But how does it all run without people in charge? That's where smart contracts come in. Meet smart contracts, the automated programs running the cryptoverse. A smart contract is code on a blockchain that executes agreements automatically. Think of it like a vending machine. Put in money, get a soda. No human needed. Smart contracts work the same way. If X happens, then do Y. Example. A freelance designer and client use a smart contract. The client deposits payment and the contract releases funds when the work is delivered. No trust issues, no middleman. The code enforces the deal, not a lawyer or bank. This automation unlocks new possibilities. Insurance that pays out automatically, supply chains that release payments when goods arrive, and more. Smart contracts are the building blocks for decentralized apps. They make agreements fast, transparent, and secure. No one can change the rules once the contract is live. The code is the law. This is how the cryptoverse runs itself. Next, let's talk about owning digital things, NFTs. Digital ownership is about to get real. NFTs, non-fungible tokens, what exactly are they? At their core, NFTs are about digital ownership, granting you verifiable rights to unique digital items. To understand NFTs, let's break down the term. Fungible means interchangeable. Like dollar bills, each one holds the same value and can be exchanged for another. Non-fungible, on the other hand, means unique. Think of a one-of-a-kind painting. It has unique characteristics that make it irreplaceable. An NFT is essentially a digital certificate, a record that proves the authenticity and ownership of a specific digital asset. This certificate of ownership applies to something one-of-a-kind: art, music, collectibles, and this ownership information is securely stored on a blockchain, a decentralized and transparent ledger. Before NFTs, digital files could be copied endlessly, making it difficult to establish true ownership. Now with NFTs, you can definitively prove which one is the original, the authentic version, and crucially, you can prove who owns it, creating a clear and verifiable chain of custody. Artists can now sell original digital works as NFTs directly to collectors and fans, finally earning directly from their creations and building a more sustainable career. NFTs can also include royalties, a revolutionary feature that benefits creators long-term. This means artists get paid a percentage every time their work is resold on the secondary market, ensuring they continue to profit from their success. It's a game changer for creators, empowering them to control their work and benefit from its ongoing value. But NFTs go beyond art. They have far-reaching applications across various industries. Musicians, game developers, and event organizers are all finding innovative ways to use them. In games, NFTs let you truly own in-game items, giving you more control over your digital assets. You can even sell or trade them with other players, creating new economic opportunities within virtual worlds. Your digital sword or rare skin is truly yours, provably unique and under your control. It's not just rented from a company, you have verifiable ownership rights. In many ways, NFTs are the property deeds of the cryptoverse, establishing clear ownership in the digital realm. They unlock new ways to own digital assets, trade them freely, and create value online in ways never before possible. Digital ownership is now not only possible, it's verifiable and provable on the blockchain. Next, we'll explore how you actually use crypto and NFTs in practice. Let's talk about the essential tools, wallets and exchanges. To join the cryptoverse, you need two things: a crypto wallet and an exchange account. Exchanges are where you swap regular money for crypto. Think Coinbase, Kraken, or Binance. They're the on-ramp to the digital economy. Many people buy crypto and leave it on the exchange, but that means the exchange holds your assets. The saying goes, not your keys, not your coins. A wallet gives you true ownership. It stores your public and private keys, the digital credentials for your assets. Public key, your address for receiving crypto. Private key, your secret password, never share it. Software wallets, hot wallets, are apps on your phone or computer, great for daily use. Hardware wallets, cold wallets, are physical devices best for security and long-term storage. Using a wallet means you control your crypto, not a company. It's the step from trading to truly owning and using digital assets. Your wallet is your passport to the cryptoverse. Ready to see where all this comes together? Let's enter the metaverse. The metaverse is the next evolution of the internet, a shared 3D virtual world where you can work, play, and socialize. Crypto and NFTs power its economy. Cryptocurrencies are the money, NFTs are the property rights. Buy virtual land, own digital clothes, or collect art, all as blockchain tokens. Early platforms like Decentralized and the Sandbox already let you buy, sell, and build with NFTs. In the metaverse, your assets are truly yours. You can take them out, sell them, or use them across different worlds. It's a player-owned economy, not controlled by a single company. The vision: one day your digital identity and assets move seamlessly across the internet. We're not there yet, but the foundation is being built. The future of digital life is taking shape. The cryptoverse is full of opportunity and risk. Prices swing wildly. Never invest more than you can afford to lose. Security is your responsibility. Lose your private key or fall for a scam and your assets are gone. Hacks and bugs in apps can lead to big losses. Regulation is still evolving. Laws can change fast, affecting markets and innovation. Some rules are needed for safety, but too much could slow progress. The road ahead will be bumpy, more innovation, more adoption, but also more scams and crashes. The key is education. Understand the tech, know the risks, and stay skeptical. Crypto's future isn't guaranteed, but its potential is huge. Keep learning, stay curious, and make informed choices. The cryptoverse is being built, block by block. Your knowledge is your best tool. The digital frontier is open to everyone. Are you ready to explore it? Let's talk about Bitcoin, the word on everyone's lips, from news anchors to your tech-savvy nephew. Is it money, code, or just hype? Actually, it's a radical rethink of what money can be in our digital age. Instead of trusting banks or governments, Bitcoin lets us trust math. No middlemen, no gatekeepers. Imagine sending money anywhere in the world, instantly, with no one taking a cut or telling you no. It's a direct peer-to-peer system that puts you in control of your own value. So, why does this matter? Because Bitcoin is challenging everything we thought we knew about money. Flashback to 2008, a year etched in financial infamy. The world teetered on the brink as established institutions, once considered pillars of stability, began to crumble. It was a period of unprecedented uncertainty, a time when the very foundations of our economic system were shaken to their core. The world's financial system crumbled, like a house of cards in a hurricane. Major banks faced collapse, stock markets plummeted, and a sense of panic gripped global markets. The fallout was devastating, leaving a trail of economic wreckage in its wake. Trust in banks evaporated, replaced by fear and disillusionment. People lined up for blocks, desperate to withdraw their savings, only to find that access to their own money was restricted. The crisis exposed the vulnerabilities of a system built on faith and confidence. And people lost everything. Homes were foreclosed, businesses shuttered, and livelihoods destroyed. The American dream turned into a nightmare for countless families, as the financial crisis swept away their hopes and aspirations. The impact was felt across all sectors of society, leaving deep scars that would take years to heal. Out of this chaos, a mysterious figure named Satoshi Nakamoto appeared online. Shrouded in anonymity, Satoshi presented a radical new vision for the future of finance, a decentralized peer-to-peer system that would challenge the established order. Satoshi saw the flaws, the inherent weaknesses and vulnerabilities that had led to the 2008 meltdown. They meticulously analyzed the existing financial infrastructure, identifying the points of failure and the systemic risks that threatened its stability. Endless money printing, a practice that devalued currency and fueled inflation. Satoshi recognized the dangers of unchecked monetary expansion and the potential for governments to manipulate the money supply for their own purposes. Insider control and fragile systems. The concentration of power in the hands of a few powerful institutions created opportunities for abuse and corruption. The lack of transparency and accountability made the system vulnerable to manipulation and fraud. Their solution? A new kind of money, a digital currency that would operate outside the control of governments and banks. This revolutionary concept promised to democratize finance and empower individuals with greater control over their own wealth. Finite, with a limited supply that could not be inflated or manipulated. This scarcity would give it intrinsic value and protect it from the ravages of inflation. Transparent, with all transactions recorded on a public ledger, accessible to anyone. This transparency would promote accountability and prevent fraud, and free from government or bank control. This independence would protect it from political interference and ensure its neutrality. The dream, a vision of a more equitable and accessible financial system. A peer-to-peer electronic cash system, allowing individuals to transact directly with each other without the need for intermediaries. Open to all, owned by no one. A truly decentralized system, governed by its users, not by a central authority. In 2009, the first Bitcoin was born. The Genesis block was mined, marking the beginning of a new era in finance. A direct response to the broken trust of 2008, a symbol of hope in the face of financial despair. It was a technological answer to a human problem, a testament to the power of innovation to address the challenges of our time. And it changed the financial conversation forever, sparking a global debate about the future of money and the role of technology in shaping our economic destiny. Who is Satoshi Nakamoto? No one knows. One person, a group, a myth. Satoshi published a 9-page paper in 2008 outlining Bitcoin's blueprint. The genius. Solving the double spending problem without a central authority. In 2009, Satoshi mined the Genesis block, embedding a headline about bank bailouts, a statement, and a warning. After 2 years guiding the project, Satoshi vanished, leaving Bitcoin to the world. No founder, no single point of control. True decentralization. Bitcoin became a system that belongs to everyone and no one. So, how exactly does Bitcoin operate without the need for traditional banks acting as intermediaries? It's a question that gets to the heart of Bitcoin's revolutionary design. The answer lies in the blockchain, a public digital ledger that's distributed across a vast network. Think of it as a new kind of database, one that's not controlled by any single entity. Picture a notebook that everyone can see and access. It's not hidden away in a bank vault, but open for all to inspect. This notebook is constantly updated by thousands of computers spread across the globe, each holding an identical copy of the ledger. This ensures redundancy and prevents any single point of failure. Every single transaction is meticulously checked and verified, not by a central authority, but by all the participants in the network. This process is known as mining. This collective verification process makes cheating or altering the records nearly impossible, as any fraudulent transaction would be immediately flagged by the network. Verified transactions are then grouped together into blocks, like pages in our digital notebook. Each block is then sealed with complex mathematical puzzles, requiring significant computational power to solve. This process, known as proof of work, secures the block and makes it tamper-proof. Once a block is sealed, it's chained together with the previous block, creating a continuous and immutable record. Each block contains a reference to the block that came before it, forming a chronological chain of transactions. This process continues, forming an unbreakable chain that stretches all the way back to the very first block, known as the Genesis block. So, what would happen if someone tried to change just one record within the blockchain? To alter a single transaction, you wouldn't just have to change that one block. You'd have to rewrite the entire chain from that point forward. And you'd have to do it simultaneously on thousands of computers across the globe, all of which are constantly verifying the integrity of the blockchain. It's a system of security built on transparency, cryptography, and the power of distributed consensus. The blockchain, therefore, serves as the very backbone of Bitcoin's trustless system, eliminating the need for intermediaries like banks. This inherent design is precisely why Bitcoin is so incredibly difficult to hack, manipulate, or censor. It's a testament to the power of decentralized technology. So, you're intrigued by Bitcoin and you're probably wondering, how do you actually use it in the real world? It's not like you can just walk into a store and hand over a digital coin, right? Well, the process is actually quite straightforward, and it all starts with something called a wallet. You need a wallet. Think of it as a digital purse or bank account specifically for your Bitcoin. It's an app that holds your keys, not your coins, which is a crucial distinction to understand. The coins themselves exist on the blockchain, but your wallet holds the cryptographic keys that allow you to access and manage them. Your public key is like your address. It's what you share with others when you want them to send you Bitcoin. It's perfectly safe to give out, like sharing your email address. Think of it as the destination for your digital funds. Your private key, on the other hand, is your secret password. It's what allows you to authorize transactions and prove that you own the Bitcoin associated with your public key. Guard it with your life. Never share it with anyone, and keep it stored securely. Lose your private key, and your Bitcoin is gone permanently. There's no help desk, no recovery process, no way to get it back. This is a fundamental aspect of Bitcoin's decentralized nature. You are solely responsible for the security of your keys. It's a double-edged sword: ultimate control, but also ultimate responsibility. Now, where do new Bitcoins come from? They are created through a process called mining. Powerful computers race to solve complex mathematical puzzles. These puzzles are designed to be computationally intensive, requiring significant processing power. The first computer to solve the puzzle gets to add a new block of transactions to the blockchain and earns a reward in the form of newly minted Bitcoins. But here's the kicker. Only 21 million Bitcoins will ever exist. This is digital scarcity, hardwired into the code. Unlike traditional currencies, which can be printed at will by central banks, Bitcoin has a fixed supply, making it inherently resistant to inflation. To further control the release of new Bitcoins, the mining rewards halve every 4 years. This event, known as the halving, reduces the number of new Bitcoins entering circulation, further reinforcing its scarcity. This halving process continues, slowing the new supply until the last Bitcoin is mined, which is estimated to occur around the year 2140. After that, no more new coins, ever. The supply will be capped at 21 million, forever fixed in the digital ledger. This fixed supply is what makes Bitcoin unique and gives it its potential as a store of value. It's not just digital money, it's digital gold, a scarce and decentralized asset that exists outside the control of traditional financial institutions. And it's all powered by code, not central banks, making it a truly revolutionary technology with the potential to reshape the future of finance. It's a system built on cryptography, mathematics, and a shared belief in a decentralized future. Why use Bitcoin if your debit card works? For billions, the answer is survival. In unstable countries, Bitcoin is a lifeline, immune to hyperinflation and government control. Anyone with a smartphone can join the global economy, no bank required. It's censorship resistant, no one can freeze your funds or block your transactions. Activists, journalists, and ordinary people use it to protect their wealth and freedom. Investors see it as digital gold, scarce, durable, and decentralized. It's a hedge against chaos, a store of value for the digital age. Bitcoin is financial empowerment wherever you are. But Bitcoin isn't perfect. Volatility is wild. Prices swing like a roller coaster. It's slow compared to tap-and-go payments. Transactions can take minutes or longer. Security is a double-edged sword. The network is strong, but if you lose your keys, your money's gone. Hacks and scams target users, not the blockchain. No customer support, no do-overs. Being your own bank means total responsibility. Developers are working on fixes. The Lightning Network speeds up payments, but volatility remains. As more people join, the hope is prices will stabilize. For now, Bitcoin is high risk, high reward. Only jump in if you can handle the bumps. Bitcoin's biggest controversy? Energy use. Mining consumes as much electricity as some countries, much from fossil fuels. Critics call it an environmental disaster. Defenders say security requires energy. Some miners use renewables or waste energy, pushing for greener solutions. The industry faces pressure to clean up. Its future may depend on it. The debate is fierce, and the world is watching. Can Bitcoin go green and still stay secure? So is Bitcoin the future or a fad? It's a bold experiment, born from crisis powered by code and challenging the old guard. It's volatile, imperfect, and energy-hungry, but it's forced us to rethink money itself. Banks and governments are scrambling to catch up, exploring their own digital currencies. Bitcoin may not replace cash, but its technology and ideas are here to stay. It's a digital gold, a new kind of value for a new era. The story isn't over, it's just getting started. And whether you're in or out, you can't ignore it. Have you ever wondered what money really is, not just how much you have, but what it represents? Most of us trust banks to keep our money safe and governments to maintain its value. But what if that trust disappeared? What if the system we rely on suddenly felt fragile? This isn't just a thought experiment. In times of crisis, millions have faced this exact question. Now, imagine a new kind of money, one that doesn't sit in a bank but exists everywhere on a global network. A currency that no single person, company, or government can control or devalue. This is the radical idea behind Bitcoin money, built on math and code, not trust in institutions. It lets you be your own bank, challenging everything we know about money. For centuries, we've needed banks and governments to move and store value. Bitcoin proposes a world where you can send money directly to anyone, anywhere, without permission. It's a bold response to a broken system, a shift in how we think about money, ownership, and freedom. This isn't just for techies or investors, it's about a fundamental change in financial power, and it all began with one of the biggest financial meltdowns in modern history. In 2008, the global financial system nearly collapsed. Banks failed, people lost their savings, and trust in the system vanished. Out of this chaos, a mysterious figure named Satoshi Nakamoto published a white paper, Bitcoin, a peer-to-peer electronic cash system. The timing was no accident, it was a direct response to the crisis. Satoshi's blueprint described money that didn't rely on banks or middlemen. Transactions would be recorded on a public ledger secured by cryptography. No single entity could manipulate or block the system. It was a transparent, decentralized alternative to the failures of 2008. The white paper wasn't just technical, it was a quiet rebellion against a broken financial system. While governments bailed out banks, Satoshi offered a way out. Ordinary people could opt into a system they controlled. This was the spark of a financial revolution. On January 3, 2009, Bitcoin officially launched with the mining of the Genesis block. Satoshi embedded a message in the code. The Times 03 Jan 2009 Chancellor on brink of second bailout for banks. This wasn't just a timestamp, it was a statement linking Bitcoin's birth to the failures of traditional finance. The Genesis block became Bitcoin's mission statement: independence from endless money printing and bailouts. Every Bitcoin user today has a copy of that block and its message, a constant reminder of why Bitcoin exists. Bitcoin wasn't created for speculation, it was a challenge to the old system. From that first block, the network grew, each new block linking to the last, forming an unbreakable chain. This chain is a secure, chronological record of every transaction. The Genesis block was the anchor for a new economic reality. It started quietly, but it was the spark that changed everything. How does Bitcoin work without banks? The answer: blockchain. Think of blockchain as a global public ledger, a giant spreadsheet copied across thousands of computers. Every transaction is broadcast to the network and grouped into blocks. Miners verify transactions, ensuring you actually own the Bitcoin you're sending and haven't spent it elsewhere. Once verified, the block is added to the chain, creating a permanent, unchangeable record. Changing a past transaction would require impossible computing power, making the system secure. Because everyone has a copy, everyone agrees on who owns what. There's no single point of failure. If one computer goes down, the network keeps running. This creates a transparent, resilient system based on math, not trust. Blockchain is a fundamental shift, from trusting institutions to trusting code. To use Bitcoin, you need a digital wallet software or hardware that stores your keys. Your wallet has a public key, like an account number, and a private key, like a password. The public key lets others send you Bitcoin, the private key lets you spend it. Lose your private key, and your Bitcoin is gone forever, no customer service to call. Now, about mining. Miners are computers that verify transactions and add them to the blockchain. Why do they do it? Because they're rewarded with new Bitcoin. To add a block, miners solve complex puzzles. The first to solve it gets the reward. This process both secures the network and creates new Bitcoin, similar to mining gold. Mining makes attacking the network extremely difficult and distributes new coins predictably. The system is self-sustaining wallets, keys, and mining work together to keep Bitcoin secure. There's no central authority, just code and community. You control your money, but you're also responsible for it. That's both empowering and a little daunting. This is how Bitcoin operates outside the traditional banking system. Bitcoin is often called digital gold, and for good reason. Gold's value comes from its scarcity. There's only so much of it, and it's hard to mine. Bitcoin was designed with the same principle. There will only ever be 21 million Bitcoin. This hard cap is unchangeable, unlike national currencies that can be printed endlessly. Bitcoin's scarcity makes it a hedge against inflation, a way to protect your wealth. Like gold, Bitcoin is decentralized, no one controls it, and no government can seize it without your private key. It's censorship-resistant and sovereign, just like holding physical gold. But Bitcoin has advantages. You can send it anywhere in minutes, store it on a USB stick, and divide it into tiny fractions. You can't do that with gold bars. Bitcoin takes the best properties of gold and upgrades them for the digital age. It's a global, borderless, and programmable store of value. That's why it's called digital gold. And it's changing how we think about money. In stable countries, Bitcoin might seem unnecessary, but for billions it's a lifeline against hyperinflation and government mismanagement. In places like Venezuela, Bitcoin protects savings from being wiped out. It also revolutionizes cross-border payments. No more slow, expensive transfers. Migrant workers can send money home in minutes for a fraction of the cost. Bitcoin promotes financial inclusion. Nearly 2 billion people without bank accounts can join the global economy with just a smartphone. No permission needed, just a wallet and internet access. In Nigeria and Ukraine, Bitcoin has helped people run businesses and receive aid when banks fail. These real-world stories show Bitcoin is more than an investment. It's a tool for freedom. It's economic empowerment for those who need it most. For years, Bitcoin was ignored by mainstream finance. Now it's a multi-trillion-dollar asset, with major companies like Tesla and MicroStrategy investing billions. Banks and investment firms are offering Bitcoin services, making it accessible to everyday investors. Some governments embrace it. El Salvador made Bitcoin legal tender to boost financial inclusion. Others, like China, have banned it, fearing loss of control. The US and Europe are crafting regulations to balance innovation and consumer protection. Bitcoin's global impact is undeniable. Every major player is now paying attention. The world is adapting to this new financial reality. Bitcoin isn't perfect. Its price swings wildly, making it risky for everyday use. Mining uses a lot of energy, raising environmental concerns. But the industry is shifting toward renewables. Scalability is a challenge. The network can only handle so many transactions per second. Solutions like the Lightning Network allow for instant, low-fee payments on top of Bitcoin. Despite these hurdles, Bitcoin is driving a global conversation about money and power. It shifts control from institutions to individuals. Whether you invest or not, understanding Bitcoin is crucial. It's a movement for a more open, fair financial system. The future of money is being written now, and Bitcoin is at the center. Keep learning, stay curious, and decide what role it will play in your life. The story of money is changing, and you're part of it.